For more than a century, the month of September has on average been the worst month for financial markets, and sadly, this past September has been no different. I'm joined today by fund manager Guillaume, where once a month we like to take the opportunity to do a roundup of financial markets over the past month. So, Guillaume, September had more pains than gains. Why don't you talk us through the top three market themes we saw over the past month?
Hi, Nicole. Sure. The first theme has to be oil prices. The rise has been relentless, 30% over the third quarter. And, that's kind of leads us to our second theme, which is central banks having to keep interest rate high in an effort to sort of control that inflation. Higher for longer is the key word. And the third theme has to be the kind of positive economic surprise that we've seen and some sort of resilience in global growth despite all these headwinds.
So if we start with the oil prices, obviously it had a surge in September. What was the driver behind that increase in oil prices, and what does it mean, I guess, more broadly, if anything, for the global economy?
Yeah, it's been a bit of a surprise to markets because that increase has been driven not by necessarily strong economic demand, but more by production cuts by two of the largest oil exporters, which are Saudi Arabia and Russia. And they're extending those production cuts until the end of the year. So maybe it won't have the same inflation impact because of where it's coming from. But generally, it's not going to be helpful for the global economy at this stage.
Certainly, and definitely not helpful if there's energy intensive sectors either. Now, Guillaume, I'm going to put you on the spot. I have a question for you. Do you know which country has the cheapest production cost for a barrel of oil?
Um, yes, it has to be somewhere in the Middle East. I would say Saudi Arabia.
You're correct. They say Saudi Arabia sits on two pools of liquid water and oil. Saudi Arabia has the cheapest cost to produce oil at just $3 a barrel, which I think is pretty incredible given where we're seeing it trade at the moment. But although you were saying this oil prices and the increase may not trigger an inflationary impact, we are still talking about this battle to tackle inflation. So, what are we seeing the positions central banks are taking with inflation now, and what's the impact to markets?
Sure, yeah. It seems to be clear that central banks are nearly done with raising interest rates. We're close to the peak. There might be one or two rate hikes in the pipeline. But effectively, what they're signaling now is that interest rate might have to stay higher for longer in sort of restrictive territory to ensure that the job is on inflation is fully completed. So no rate cuts in the near future, despite interest rates being very high. And effectively, the bond market really didn't like this. And we saw a very sharp reaction after the Fed meeting that we had in September, large sell-off in bonds, and that really impacted the stock market as well, given the magnitude of the move.
So investors, obviously, as you say, are still concerned about the impact of this continued high rates. But as you mentioned, onto your third point, we are still seeing some fairly decent numbers coming out in global growth or economic growth, particularly from the US. So what is going on with these numbers?
Yes, definitely some positive economic surprises. Economy more resilient than expected to all those headwinds that we talked about, oil, interest rates. And so the service sector in the US still holding up pretty well, still supporting decent job growth. It's cooling, but still a pretty healthy clip. And that's supporting consumption and definitely pushing this idea of a recession further out. Don't expect a recession in the near term. It's fair to say there's some divergence if you look more globally. Germany, for example, definitely has experienced economic contraction over the last few quarters, but that's really due to the impact of the energy crisis with Russia. So potentially a bit different. But I guess what we need to prepare ourselves is that it takes time for interest rate rises to play out and filter through the economy, and it's fair to say that most of that impact is still ahead of us. I guess the key question for markets is, can we really resolve that inflation problem for good without having to go through a painful recession?
Yeah, And then no doubt something we'll be keeping a close eye on. Now, with these monthly specials, we always call out a stat of the month. This month, it's the stat around the country with the cheapest oil production cost, which was Saudi Arabia producing oil for just $3 a barrel. So there you go. With that, thank you, Guillaume. Thank you all for watching, and join us again next week for another topic that's caught our eye.